Morning, Steve Free in Chicago with the morning grain prices and comments. As far as the grain markets are concerned, we're a little bit easier overnight. I don't think there's any heat in the 2-week U.S. Midwest forecast. There's not a lot of rain either. We really don't get a warm and fuzzy feeling that there was any movement towards a deal between U.S. and China as the trade talks ended. There was some discussion that they tried to come up with some kind of idea on how to buy U.S. ag farm goods, but they agreed to come in the U.S. and meet in September. So that's another month in which we may not have a deal, and the market's kind of disappointed in that. Technically, we're trying to hold $8.88 in the November beans, $4.20 in December corn, and $5 in December wheat. Those are pretty important price levels from a supply bull standpoint. The problem is you don't have the demand that really support prices there. And so we doubt if we're going to get a bullish report from the USDA next week. And so we're just kind of sitting here with low volume trade, trying to just figure out the size of the U.S. crop, the demand for that supply, the final carryout, and just where value is. Again, South American corn premiums are below U.S. Looks like Black Sea is going to have, and Europe's going to have some wheat to sell below U.S. prices. And I think for the most part, the Chinese would rather buy Brazil soybeans because of the better quality. But at the same time, there's concern that the lower hog numbers because of the African swine fever may reduce their imports even further of soybeans. For deliveries, August, 408 contracts of beans, 105.7 oil, and 404 meal. So again, deliveries on those contracts probably suggest that the demand structure is not strong enough to stop these deliveries. We also noted that one farm supply dealer and fertilizer producer expects U.S. farmers to plant as many 95 million acres of corn next year, coming off this bad year and trying to recapture some revenue with more acres. The head of the U.S. EPA defended his agency's expanded use of waivers, exempting refiners from national biofuel law during a closed-door meeting with farm state senators last week, saying that, according to him, the program has had no negative impact on ethanol demand. So Midwest weather, next 7 to 8 days, less than average rainfall, but temperatures below normal. The 11 to 16 day outlook also has a northwest flow that provides ridging in the west, while average below precip and below average temperatures are seen for much of the Midwest. Yesterday, the funds were sellers of beans, corn, and wheat, and we estimate that right now they're long about 20,000 wheat, 120 corn, and short about 44 beans. So I guess we just kind of sit here with perfect weather here in Chicago. Not a lot of rain for the crop, but no heat to stress the crop, and probably just kind of looking ahead to the USDA August 12th report for some kind of direction. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.